After a strong July rally, NIO stock took a small step back today, closing just under $5. But let's not kid ourselves, this isn't a story about a stock running out of steam. In fact, today's dip could be more like a deep breath before the next big move. So what's happening with NIO, what's driving the price, and what should investors look for next? Let's break it down. NIO ended today's session at around $4.83, down nearly 2% on the day. That's after hitting an intraday high of just over $5. Now, on the surface, that might look like a pause in momentum. But here's the thing, volume was still solid, and the overall context matters a lot more than a single red candle. Over the past month, NIO has surged more than 40%. That's not a fluke. That's what a sentiment shift looks like. A wave of retail investors, renewed institutional attention, and growing buzz around NIO's Onvo brand have pushed this stock back into the spotlight. But it's also attracted short sellers, who, to be fair, haven't exactly backed down. Roughly 9 to 10% of NIO's float remains sold short, with a short interest ratio hovering around 5 days. That means it would take 5 days of average trading volume for short sellers to cover their positions. That's significant. And if we see another wave of positive news, the short squeeze narrative we've been talking about all month is still very much alive. But what about fundamentals? Well, there's a real story brewing underneath the price action. NIO's pivot toward mass-market vehicles is starting to bear fruit. In June, Onvo and Firefly, its sub-brands aimed at middle-income consumers, accounted for 40% of total deliveries. That's a huge shift. It shows that NIO isn't just catering to the premium market anymore. It's scaling. And that's exactly what Wall Street has been waiting to see. Now, there are still financial hurdles. NIO reported a net loss of 6.8 billion yuan in Q1, which is nearly $930 million. So yeah, it's still losing money. But here's the twist. Vehicle revenue was actually up 19% year-over-year. And CEO William Li says he expects the company to reach adjusted operating profitability by the fourth quarter of this year. That's an ambitious timeline, but it's not impossible, especially if cost-cutting efforts continue. Management has been clear, SG&A expenses, basically, the company's overhead, will be cut to under 10% of revenue. That's down from 24% last year. If they hit that goal, it could be a turning point, not just for investor sentiment, but for the entire narrative around the company. Let's talk about valuation for a second. Compared to other Chinese EV makers, NIO is still trading at a discount. Right now, it's valued at about 2/3 of its projected 2026 revenue. Meanwhile, competitors like Li Auto and XPeng are trading closer to or even above their forward sales. If NIO can execute even moderately well, it's hard to argue that this stock isn't undervalued. So what's next? We're heading into a crucial period. Delivery numbers for July and August are going to matter a lot, especially with the Onvo L90 hitting the market. If early reviews are strong, if test drives convert to pre-orders, and if we start to see more chatter around mass market acceptance, it could light a fire under the stock. Battery swap profitability is another sleeper catalyst. Around 20% of NIO swap stations are now reportedly profitable. With over 3,100 stations in operation and more being built, this could become a major competitive edge. And if NIO can prove that these stations are not just a cool feature, but a real revenue stream, it's going to change how analysts value the company. Let's not forget the macro backdrop either. Chinese regulators have been walking a fine line, but recent signals suggest ongoing support for the EV sector. If the government steps in with incentives, tax breaks, or even infrastructure spending, NIO could benefit massively. In short, today's price action isn't the end of the story. It's a pause. And if you zoom out just a little, the broader trend is clear. This stock has momentum. It has a growing fan base. And it has a business model that's finally starting to look scalable. So whether you're already long or still watching from the sidelines, keep your eyes on the next few weeks. The short interest, the delivery numbers, and those earnings in August are going to tell us whether NIO is truly turning the corner, or just setting up for an even bigger move. Thanks for tuning in. If you found this video helpful, hit that like button, drop a comment with your thoughts on NIO, and subscribe for more weekly updates. This story is far from over, and I'll be right here to break it down with you, one day at a time. Catch you in the next one.